The first tool we're going to look at for this setup is something called a moving average indicator. You'll probably hear people call them EMAs a lot. That just stands out for exponential moving average. But honestly, don't get too hung up on the fancy name right now. Basically, all moving averages does is take the average price of whatever you're looking at, a stock or a crypto, over a certain period of time, like the last 10 days or the last 50 candles. Now, for this particular strategy, we're going to use two specific moving average lines. We're going to use a 90 period EMA and a 200 period EMA. The whole point is using these together is to give us a super simple way to identify the main trend direction. We have two basic rules for this. So for an uptrend, meaning the price is generally heading higher, rule number one is the EMA 90 has to be above the 200 EMA line. Think about why that makes sense, right? The shorter term average price is higher than the longer term average. That tells you things have been picking up lately. And rule number two is that the actual price itself, the candles, they need to be sitting above both of those lines. That confirms the price is actively moving with that upward momentum. Okay, now for a downtrend where the price is generally falling, it's the basic exact opposite logic, but we use the same two lines, the 90 and the 200 EMA. Rule number one for a downtrend is the 90 has to be below the 200 EMA. So the shorter term average is lower than the longer term average. The rule number two is the actual price, the candles, needs to be below both 90 and 200 line. Again, that just confirms the price is following that downward trend. Now, if either of those conditions isn't met, maybe the lines are tangled up or the prices are stacked between them, then we don't have a clear trend according to this setup. And in this case, the rule is simple. You just stay out. No trading that asset until the trend is clear. So we've got the moving average to figure out the main trend direction, right? That's a step one. Now the second piece, we need to really bring this strategy together as another indicator. But before I introduce the second one, just give me a huge favor and smash the like button if you liked the video so far. Now the second indicator is called the FTS Black Flag indicator. Now when you add this indicator to your chart, it's gonna draw some lines or bands, kind of like a ribbon that follows the price. You might see some other little things pops up too with this indicator, looks like dots or triangles on the chart. But here's the important part for this strategy. We only need to pay attention to those bands or ribbons. Seriously, just the bands. So where you're setting it up, if you can, just focus on getting the bands to show up. You can usually hide or just ignore those other little dots or triangles for what we're doing right now. It's all about those bands. Okay, so we know how to use the moving average to figure out the main trend, and we got these FTS bands on the chart. Now the big question is, how do we actually use all this to find a trade and make some money? Well, it's pretty straightforward. First, remember, we only want to trade with the trend. So if your EMAs are showing a clear uptrend where the 90 is above 200 and price above both, then we only look for buy opportunities. We just ignore any potential sell signal in that case. So for a buy signal in an uptrend, we wait for the price action, those candles to pull back down and touch or get close to FTS bands. Think of that bands kind of like a dynamic support area when the market's going up. Now here's a little detail that helps filter for better trades. When a price is retesting the bands, you ideally want the 90 and 200 EMA lines to not be right in the middle of the bands or super tangle up with the price right there. You want a little separation if possible. It just tends to be a cleaner setup and often works better. Once the price has pulled back to the bands and assuming that EMA situation looks good, the trigger to actually enter a buy trade is when you see a candle closes back above the upper FTS band. That closing price is your signal. And hey, never forget your stop loss. For this strategy, a good spot for your stop loss is typically just below the lower FTS band. And for your target, meaning where you want to take profit, a solid rule of thumb is to aim for at least twice the amount you're risking on your stop loss. That's your basic 2-to-1 reward to risk. Let me show you what this looks like on the chart right now with a few examples so it makes more sense. See right here, the EMAs are clearly showing an uptrend. Price pullbacks nicely to the FTS bands. Notice how the EMAs aren't tangled up right at the bands. Perfect. Then boom, you get this candle closing back above the upper band. Right here, that's your entry signal. You hop in, place your stop loss just below the band, and look how this trade played out. Nice winner. Here's another one right after. Trends is still up, price pullbacks again to the bands, clean retest, candle closes above. Another entry using the exact same rules, and look at this one. Yeah, worked out great too. 3 solid trades using these two tools together. Alright, so that's how you find buy signals in an uptrend. Now what about going other way and look for sell trades when the market's falling? It's basically the exact flip side logic. Check this out. EMAs clearly show a downtrend, price pull back up to the FTS band, candle closes back below the band right here. That's your sell signal using the setup. You get in, put your stop loss, and you can see how that one played out following the rules. So that's gonna wrap things up for this video. Now if you're serious about finding a strategy that works and you want to see one of my absolute go-to setup, one I use all the time, then you gotta watch this video right here on the screen. Seriously, go click on that next. And while you're here, if you got value out this video, please do me a favor and hit that like button and subscribe to the channel so you don't miss out on more actionable trading tips like these. Alright everyone, I will catch you in the next one.